Hi everyone, JJ here with The Art of Value. Welcome. Well, today I've got an Alibaba update for you. Some news on Alibaba and a little bit of a different format today. If you're regular here, you'll notice that there's a lot less editing, next to no editing. That's in an effort to get this out to you quicker because editing takes a long time. But let's get straight into it. This is what's making Alibaba news at the moment. Jack Ma reserves plan to trim stake after Alibaba shares tumble. That's one headline, and we've got another one here that's Alibaba exec moves to quell staff concern over Jack Ma share sale with internal post. And another headline, this is the South China Morning Post from within China, so this is a little bit different headline. It says Alibaba reassures on founder Jack Ma's share plan and moves to quash layoff rumors in internal letter. So we're going to look at these more in detail. Jack Ma halts plan to cut his Alibaba stake after shares in the Chinese e-commerce giant drop, and that's on CNBC. And we've also got this one here that Goldman Sachs pounds the table on Alibaba stock. That's from the 21st of November. And the share price over the last few days since this news came out, and remember we had earnings, the previous video, which you can go back and see. I'll put a link in the description on YouTube and elsewhere about the earnings. I went through all the earnings and what I thought of those earnings. So go and see that if you want to. This is a follow-up to that. So the share price is down 0.68% only over the last 5 days. So really not much movement with all this news. Over the last month, it's down 1.93. And of course, we can go back year to date. It's not been doing well, 14.16%. So let's get into the headlines. Jack Ma reserves plan to trim stake after Alibaba share tumble. So what have they got to say about this? What's the news? Alibaba Group Holding Limited founder Jack Ma is walking back plans to trim his stake after the Chinese e-commerce heavyweight suffered its biggest sell-off in more than a year last week. It went down 10% after earnings, pretty much 10%. After earnings, and Ma has not sold a single share in Alibaba as the stock price has not reached the level the billionaire was seeking, according to an internal memo from the company's chief people officer, Jane Jiang Fang, viewed by Bloomberg News. So obviously a Bloomberg article. Ma is confident in the e-commerce leader's future, the memo read. Several Chinese media outlets, including The Paper, reported the news earlier. So there's a lot of speculation going on here. There was speculation that he was going to sell pretty much all of his stake in here, but it seems to, it's not surprising that he doesn't want to sell it now. The 59-year-old Ma plans to sell 10 million shares worth about 870 million on 21st of November. The plans became public in regulatory filings last week. The disclosure coincided with the company's announcing its scrap plans to spin off its $11 billion cloud business, and the combined effect was a $22 billion drop in market value in a single day. Well, of course, shares are volatile. They go up and down. It's lost a lot since late 2020. But what they said there, the scrapped plans for the IPO of cloud. Now, I talked about that in that last video that I made. Go back and see that if you want to. I talked all about that they've decided to scrap it. And there's a video here that is about speculation that was just kind of spin to boost the share price. You can think what you want of that. Escalating US-China technological rivalry is forcing a reset in Alibaba's strategy. So I talked about that in the last video too. This, the US not wanting to sell chips, and there's this rivalry between China and the US. This it's really a trade war, and tit for tat about we're not going to sell you the chips, and and China also threatening to withdraw certain aspects of trade as well. Escalating US-China technology rivalry is forcing a reset in Alibaba's strategy, casting doubt on its attempts to rebound from an industry-wide crackdown in China and fight off scrappy new entrants such as ByteDance Limited Douyin. Alibaba dives 22 billion as chip war spurs breakup rethink. That's another headline that they're pointing to. So $22 billion, yes, it did go down. The company lost that much, but really it's lost a lot. I talked about that in the last video too, that it was about a like was it $700 or $800 billion market cap back at that peak, and now it's dropped way down. Could it get to, I don't know, could it even get down to $150 billion market cap, which would be ridiculous from where it was. It's been a huge drop. And of course, it's the geopolitical concerns and the China macroeconomic concerns, the geopolitical tensions. Pretty much a lot of investors agree. I've seen this in the comments as well. People have talked about this who have been buying it, that pretty much everybody agrees, including Charlie Munger, by the way, of course, that the value of Alibaba should be much more than it is now. It's just a lot of these other concerns weighing on it. A lot of people think it's cheap, but that doesn't mean it's going to go up because of all these tensions. The question is when or if could it languish if the Chinese economy goes on for years. Now we think of Japan. A lot of people have talked about Japan. I've thought about Japan, where Japan had this property bubble, real estate bubble, and share market bubble at the same time, and they both burst at the same time. And it's really taken 30 years. It really put hard times onto the Japanese stock market. Warren Buffett has been investing in that lately. I've talked about that Buffett's been going in. Mohnish Pabrai talked about this, how Buffett made a big investment, a big bet in Japan in the last few years, and it's tripled, quadrupled. So maybe it's time to go in there. But will China go on like this for 30 years? Because it's taken 30 years. So there's fears of that. And so there's no guarantees that Alibaba stock will rebound to what is thought to be intrinsic value. And will it sort of affect the company over time? We just don't know these things. There's probability that it will go well over the next, say, 5 or 10 years, but we just don't know. Again, Mohnish Pabrai has talked about that. It's hard to know where these companies, where Tencent, where Alibaba will be, because he has investment in Tencent. He moved it from Alibaba to Tencent. Made a video about that too. Where will it shake out? Let's continue. This article says Ma's office has issued a statement saying that Ma will continue to hold onto his Alibaba stake. This is a fact and not mere lip service, Jiang said in a note. The billionaire believes that the value of Alibaba's business will increase, she said. Ma's family office needed funds to invest in agricultural enterprises and charities in China and elsewhere. You'll notice that this is not Jack Ma saying this himself. It's not quotes from Jack Ma. It's through, third parties. So we don't know. I mean, Jack Ma hasn't really said much since that whole debacle where he said too much about Ant Group and then sort of disappeared, and he's been very quiet since then. So no statement at all from Jack Ma on this. All right. So I'm not going to make these videos too long, these unedited near live videos. Now I wanted to get to this article. I'm just going to take a sip of a drink here. We're live, so you're going to have to put up with me taking my sip of my tasty beverage, coffee, iced coffee, because we're heading into summer here. Now I want to make these videos, these near live unedited videos, a bit more personal. I think they'll just be a little bit more personal by the nature of having no editing. Now this one says Alibaba exec moves to quell staff concern over Jack Ma share sale with internal posts. The top Alibaba executive told staff on Wednesday that it was a coincidence that a plan by former chief Jack Ma's family trust to sell shares in firm was disclosed on the same day the firm scrapped its cloud units listing. So these two bits of news combined to be not great. Although, as we saw, that really hasn't affected the share price too much. It did after the earnings came out, down 10%, bam, just like that. But really, over the last, since then, it's been fairly stable, but we're talking rock bottom. We don't know it's the bottom. It's been lower, so it hasn't gone down to a new bottom. In a move seen as an effort to quell ongoing unease with the e-commerce giant Jiangfang, who we just talked about, quoted in that last article, an Alibaba partner and its chief talent officer said in a post on the firm's intranet seen by Reuters, so obviously this is an internal, but it was going to leak out, they would have known that Ma's office had earlier this year made a plan to sell more shares to reinvest in agriculture and public welfare projects. They will require the US securities rules to disclose the plan by mid-November, she said. November 16 happened to be the disclosure time set, but the stockbrokers did not know that this day was the day when the company was set to release its financial report. Well, they would have known that it was around that time. I mean, these things are set out, fairly far ahead. Yang said, adding that the coincidence in inverted commas, had created a severe misunderstanding in inverted commas. A little bit of a different angle on there. And obviously they're trying to put a spin on it. If you're getting some value out of this episode, I really appreciate it if you hit that like button if you're watching on YouTube or on X, because I'm uploading these to X too now. It's quite good to put video on there, and on Rumble and on Spotify also, but I don't think you can't like on Spotify, but you can kind of review it and rate the show. I'd appreciate that. And if you want to take it to the extra level, I've talked about this in my edited videos. You can now buy me a coffee. I'll put the link in the description. Just a small donation to buy me a coffee. And also super thanks on YouTube is enabled now too. So if you want to do that, I really appreciate either of those things. It does take quite a lot of time every week to put these videos together. And I'm going to try and do more of them if I can do this unedited format. Let me know what you think of this unedited format. Is it better to have highly edited but fewer videos? Because I can really only do 1 to 2 a week. But with these, I could potentially do them daily. We'll have to see. All right, let's move on. So Alibaba reassures on founder Jack Ma's share sale plan and moves to quash layoff rumors. So this one is the news again, but what I thought is interesting here is this is the South China Morning Post from internal China press. So this is going to be, you'd think that it would be sort of a lot more spin on it. They've kind of probably had enough of the bad news in China with the macroeconomic situation, and I think they probably just want things to go better. And the property market, of course, as I said, in Japan, that was disastrous for the stock market over the long term, and things are not great in the real estate market in China. We definitely can see that. Chief People Officer Jane Jiang, she's been busy, hasn't she? Well, this has gone out to a lot of news outlets. In the letter, the layoff speculation was false, she said, and the matter has been reported to the police. So that's the internal China. This is a kind of a police matter. Jiang also sought to clarify details regarding the planned stock sale by family trust of founder and former chairman Jack Ma, who has been silent so far. Wouldn't it be good to hear from Jack Ma at some point? In the internal letter, Alibaba Holdings has clarified details of a plan by the family trust of former chairman and co-founder Jack Ma to sell shares in the e-commerce company, and denied rumors that it plans to lay off 25,000 employees. So that was the rumor that they really don't like, that hadn't been reported in Western press. I hadn't seen that until now. In a letter published on Alibaba's intranet, Chief People Officer Jane Jiang, there she is again, said the layoff speculation was completely false and that the company had reported the matter to police. Rumors about Alibaba laying off 25,000 have spread widely in the past 2 days, with an invented storyline about how we have gone through human resources and even applied to the Social Security Department for approval, said Jiang, quashing the speculation. Meanwhile, Jiang said founder Jack Ma's office signed a contract with a stock agent earlier this year to sell shares in Alibaba. So that's true, and the plan was announced publicly in mid-November in accordance with related rules. Jiang explained that Ma intends to use the funds raised to support his agricultural technology and charity initiatives. Commenting under Jiang's post, Alibaba chairman and co-founder Joe Tsai said, "I have been with the company for almost 25 years. Alibaba has faced various doubts and challenges since the beginning, but we have persisted and overcome one difficulty after another. As long as we keep an open mind and an innovative mindset, we will have a chance to make Alibaba unique once again," said Tsai. All right, so that's trying to quash the rumors of staff layoffs, which actually usually when that sort of thing happens, it actually boosts the share price because, trying to get the company more efficient and so forth. If, macroeconomic times, it can go either way. You can't predict these things. And then we see this one on CNBC where they have the same news here. I won't go through it because we're kind of repeating the same news in different ways, different angles, but that was about the staff layoffs. Jack Ma halts plans to cut his Alibaba stake after shares in the Chinese e-commerce giant drop. So the key points in the CNBC angle is Alibaba founder Jack Ma held off on plans to trim his stake in the e-commerce giant after the share price fell. So that's the angle. After the share price fell, they pulled back. Well, it's been lower. It's been lower, a lot lower. So I don't know if that can be completely accurate. Ma has not sold a single share. Alibaba's chief people officer Jane Jiang said Alibaba's regulatory findings last week revealed Ma is looking to sell 10 million shares at a value of around 870 million. If he did that, it's kind of like when Elon Musk was selling Tesla when that news came out, the share price dropped. And just by the nature of selling that many shares quickly, or he probably would try not to sell them quickly, but I mean, that would probably affect the share price on the day anyway. And in related news, I said Goldman Sachs pounds the table on Alibaba stock, so that there are some, Western fund managers, analysts still bullish on that. I did a video the other day about fund managers, super investors who own Alibaba. That includes Michael Burry at the moment in that last quarter, of course, Charlie Munger and others too. So go back and see that if you want to. I did that on stocks today with JJ, but I might make a edit into a shorter video and put it on the Art of Value as well. 2023 has been something of a vintage year for mega cap stocks. One international giant has been thoroughly excluded from the rally. Alibaba shares are down 11% year to date, actually more than that, and they certainly weren't helped last week. The second quarter fiscal 2024 readout. After the earnings report, the stock took a hit as investors were unimpressed with what had been offered. It's true. What was disappointing to me, as I said in that video, is cloud was only growing very low single digits. There were some really bright spots there. International was growing in the 20%. And also the logistics arm, Signal, was growing at a similar rate. But really the e-commerce part and also the cloud were disappointing there. Let's see why they're bullish. Nevertheless, for Goldman Sachs analyst Ronald Kung, I don't know how to pronounce that. I'm sorry, I butchered that. And we're near live here, so I'm sorry. The post-earnings drop opens up an opportunity for investors. While the market has reacted negatively to the termination of cloud distribution and inline print, we value Alibaba Cloud at $40 billion from prior $43 billion. So really not much of a change there. We note Alibaba's shares have already retraced to levels before the cloud distribution was announced in May 2023, with stabilized Taobao Tmall CMR growth, he said. We expect ongoing buybacks and dividends to be funded by the FCF generation. This free cash flow. So yes, they also announced a dividend. Sorry, there's somebody at the door. Let me just pause. I'm back. Had a courier at the door there. That's what happens when you do these live. So anyway, Goldman Sachs is bullish. They said, this is it. This is the crux here. We continue to view valuation as attractive. As such, they rate Alibaba shares as a buy with a $134 price target. Price targets, I don't really like price targets. It's kind of ridiculous. Suggesting that shares are expecting to surge by 73% over the coming year. So that's where they stand on it, bullish. And they say 134%. It's currently around $79. So they're expecting in the next year, as we see with Alibaba and with any stock, you just cannot predict where it's going to go over the next year. Sure, it could do that. It could start to bottom out and, get good news after good news, especially if it's Chinese macro environment. We just don't know. Some bullish sentiment. A lot of investors are bullish. Others who don't like investing in China are not bullish at all, would never invest in it for these macroeconomic reasons. Let me know what you think in the comments. Do you think Alibaba is going to be a good investment over the long term or in the next year, as Goldman Sachs says? I just don't know, but I am invested in Alibaba. As I said, I'm going to let it play out. I haven't, at least 3 years. I haven't owned it for 3 years. It has not done well, but we'll see how we go 3 to 4 years, and we'll see. As I said, a lot of people think it's undervalued now and it's got a lot of upside, but when and if is a big question. So we'll see how it goes. So thanks for listening or watching to this one. If you're watching on YouTube, I'm going to put a video here about what YouTube thinks that you should watch next. And thanks for watching or listening, and I'll see you in the next one.